All right, all right, all right. Good afternoon, team. Good afternoon. Hope you're all having an amazing Sunday so far. It is a bloody night so far. The market is dropping really hard. The S&P 500 is down from 608 close down to 602 so far. So that's a firm $6 drop on the S&P 500. For those of you that are hedging the S&P 500, are probably doing really well off of this over the weekend drop. Now, the fear is coming from the FOMC meeting. There are a lot of, I think investors are realizing, participants are realizing that there's going to be a lot of tariffs coming in from Trump, and that's going to make the market a bit volatile. We have been talking about this for some time now, and we even showed some examples of such volatility. However, the real reason why the market is dropping the way it is at the moment is not because of those tariffs that was placed on Colombia, or I believe it was Colombia. This is solely due to the current levels we are trading at. We're very overbought, and we're going to take a look at that and show you where I think the bulls are going to show up again. But first, I hope you're all having an amazing Sunday. I hope you are ready for this week. It's going to be a wild week. We do have a major event taking place on Wednesday of this week. This is the week's major U.S. economic reports and Fed speakers. For Monday, we don't really have much going on. We do have new home sales releasing, but that doesn't really affect the market much. However, heading into Tuesday and Wednesday, we have a two-day FOMC meeting. The first day is usually private, always private. And then the second day on Wednesday is when we get the FOMC rate decision. So for those of you that are new to the market, FOMC rate decisions happen every few months. And they usually provide guidelines for their future, what they're going to do, whether they're going to cut rates, increase rates, leave rates the same. And the data usually that they gouge off of is the PPI and the CPI data as well. So such data comes out. The PPI comes out, I believe, every Friday, but the CPI comes out once a month, usually in the middle of the month. So we do have FOMC happening this week. And the way this event usually goes is we have the FOMC rate decision being released at 2 p.m. Eastern time and 11 a.m. for those of us that are in the West Coast. And 30 minutes after that, we have Powell speaking at the podium and then getting questioned by journalists after, which greatly affects the market because that's when we really hear his thoughts and their reasoning on the dot plot, as well as any other data that they provide us. So it's going to be a very crucial Tuesday and Wednesday. Most importantly, Wednesday. And I think the market is just simply de-risking and pulling back to levels where the risk and returns are not as lopsided as here. So as we look at the chart here on the S&P 500 here for SPY, before the market even opened, at the moment, if we look at the S&P 500 futures, we're down big. We're down almost 1%, which is $6 on the S&P 500. We can see here, this is where we closed, and we have had a really, really big drop so far. As we can see from the futures on the daily chart, now going to the 5-minute chart, does look like they're going to get some upside here, but we shall see into tomorrow's opening. I believe Nasdaq is down more. Nasdaq is down almost 2% there, 1% more than the S&P 500. We're currently trading at these levels of support on Nasdaq, so I wouldn't doubt if bulls do step in here. We'll take a look at. We'll analyze that in a bit. But yeah, team, we have been talking about this. We discussed it in the mentorship as well. When we are very extended from the 20 EMA line, so this is the white line, the 20 EMA line, and considering that we're in an uptrending market, the expansion is going to be up. So the expansion will be up and the contraction will be to the downside. So if we take a look at take a look at the S&P 500, you can see whenever we get too extended away from the 20 EMA line, two things happen. Either we consolidate and then correct to the 20 EMA and then move back up, have another expansion, or in this case, that's a correction. In this case, that's a consolidation. You just go sideways, eating time off the clock, waiting for the moving averages to catch up, and then move higher. This usually happens in very strong market conditions, and we can see the results of that. And then, like you see, whenever we get too far away from the 20 EMA line, you just have this consolidation that really leads to nowhere. It just ends up correcting back down anytime we get too extended. So it has been, I've been watching this for about 5 years, and I'm telling you, I'm starting to really believe it, and you guys can see it in my narrative as well. And that doesn't mean that I'm going to buy puts. It just means like having this understanding is very powerful, because it tells you, hey, listen, the market moves in two phases. We got the directional phase, and then we got the sideways phase, which is the digestion or the consolidation phase. So during the consolidation, prices just go sideways. Now you can have these rally-based rallies and drop-based drops, which means directional, sideways, directional, and so forth. But you have to also account for for the way price action moves and the context of the trend. So when you're very, very far away from the 200 SMA line and you're super, super extended, you're going to have a difficult time in doing a rally-based rally, and you'll end up correcting back to the bigger levels. So we can see the market has been very volatile, and taking into consideration this volatility, when we are this far away from the 20 EMA line, simply put, we're going to correct back down and or wait for the moving averages to catch up. In this case, we had gone down, we had gone up in these massive gaps in between, just market gapping up and gapping up and gapping up, with most of the moves happening during these gap ups. It was bound to happen. It was bound to cool off. But do keep in mind, team, in the it's hilarious. Team, Charles said maybe Trump will put a tariff on Powell if he doesn't like what he has to say. It takes me back to the first Trump presidency, where Trump was literally like tweeting at Powell. He goes wild, and I can just see Powell just like taking the sweat off his forehead when Trump becomes president, because he's like, oh my God, not again. 4 years of torture. Yeah, Trump is gonna be on him. But yeah, team, take this into consideration, okay? When the market gets very overbought, very overbought, and we have these rally and we have these consolidation phases, be very patient, okay? So remember, take into account the context of the trend. Obviously, okay, do we think the market can consolidate here and then advance higher? Sure, we can. But for this particular chart, I would like to show you directly off of the Discord analysis. So I'm going to go ahead and read this chart really fast. I shared this earlier. SPY potential rug pull operation heading into FOMC week before next historic all-time highs, of course. If the resistance at 610, 611 holds, SPY could experience a pullback to 595. It will be essential to watch for a retest of these levels to confirm their strength. On the other hand, if SPY breaks above 611, this could trigger a breakout with a continuation upside towards 615 to 620. However, volume confirmation will be crucial to determine the sustainability of the move. The reason why I said that is because it is going to be very difficult for bulls to sustain up here. And that is because, again, like I said, the 20 EMA is trading at 596 and the S&P 500 was trading at 610 on Friday session. So obviously very overbought. And I even tried to catch it with some of my trades here. And I hope some of our team did hold it. You can see the swing trade here, bought SPY January 31st, 603 put. So I bought the January 31st, which is this upcoming Friday's expiration, including the FOMC meeting. And this contract is already $1 in the money. So considering a $6 drop, that's going to if anybody's holding, that's going to print. Now, Rain Bond is holding this SPY call here. I think this is going to print at least 50% right at the opening session. Very blessed to have an admin that is sending us such amazing alerts. I think she also picked up some UVXY shares. Make sure you guys are um, paying attention to the admins and really focusing on why we are buying, why we're behaving the way we are. If you know, I have been mentioning that we're going to go sideways. There's two things that can really happen when we're this overbought. Either we're going to go sideways for a while for the moving averages to catch up if the market is very strong, or we're going to pull back on any uncertainty and pretty much get close to the home base, which is where the 20 EMA line would be in this case, since we are in an uptrending market. But yeah, those UVXY shares are also going to print. Really great timing on that for Rain Bond. I think that's great. That's very admirable for an admin, and I had to give her a shout out on that. But yeah, team, this is the state of the market. Now, where do we buy? If you're a bull and you're looking to buy this potential pullback, this opportunity, which is exactly what we want to do, where do we end up buying the S&P 500? I'll create this box here, and let's go back to our the S&P 500 analysis here. So if the resistance, the reason why I believe a rug pull operation is likely here is that SPY is significantly extended from the 20 EMA line. We talked about this historically. When prices move too far from the line, the market either consolidates sideways to allow the EMA to catch up, or experiences a gradual pullback towards the 20 EMA during the contraction phase. This overextension increases the probability of near-term correction or sideways movement to restore balance in the supply and demand dynamics. So it's really important that you understand this market condition. And I don't want to sell the course here, but I'm telling you, we teach that all in the mentorship program, and we really encourage you to join us. Another reason why this particular breakout was not going to advance is because when you get, let's say, this is the formation of the resistance there. This is the establishment. In the second test, in the establishment phase, you never get a breakout. Like, yes, you can get a breakout, don't get me wrong, but the chances of that happening is low, especially when you have such a huge range of consolidation. So what needs to happen if bulls are very strong is you need to see something like that, where you pull back a little bit down to 595 to 597 area, and then you advance back up to the level of resistance for the third test. And that's when you easily break that level of resistance, because the second one is usually just absorbing the supply, with the third one leading to that breakout above 610. So that's why I think once we do pretty much come down, once we do come down to those levels, then bulls are going to have a higher likelihood of breaching 610 historic all-time highs and heading towards 615 to 620 next, especially if markets are bullish. So once we go down to 595 area and we see that bulls are stepping in, then we're going to step in. And that's on the bigger picture, okay, team? Now, I do want to talk about I do want to talk about what we're going to do exactly tomorrow for us day traders and even dip buyers very shortly. But for now, I just wanted to show you where we should wait until market really pulls back down to in the 595 area. So from our mentorship classes on support and resistance, as well as supply and demand dynamics, we understand that a breakout rarely occurs on the second test of resistance. We talked about this. This is because that's the establishment phase. So you pull back, and then you get another retest at the level of resistance to really absorb the remaining supply and gouge the strength of the bear resistance. And then after the third, which is what we talked about, then we see a rebound. And if the market is in an uptrend, this sequence typically follows with a break of the resistance, followed by a continuation higher for the bulls there. So I just wanted to share that. And now let's take a look at what we should do heading into tomorrow, considering the sheer downside. But so far, team, do you have a good idea of what we should expect from SPY heading into FOMC meeting? Perfect. Okay. So yeah, that's why we need that 595. 595 would be a good level. That would create some form of cup and handle formation. And I think that will be much better for us to advance. So if you ever see these kind of market conditions in the future, Kasha, Charles, for those of you that are part of the mentorship, please keep this in mind. Okay, keep this in mind. When you're up here trading in these ranges, just wait it out. Convince yourself to be patient, because if we're far away from the 20 EMA line, just like history has shown us, there's only, I mean, if you really think about it, how can the market screw both sides really well when we're trading up here? Pull back down, right? Pull back down, throw all of the bulls off, and then come back down, then throw all of the bulls off and go right back up. So every time you can see, it's just, I mean, think about it. When we're higher, the universal laws of supply and demand are, it is going to be higher to get demand up there, but and supply is going to be higher here. But when we're lower, it's obviously vice versa. So yeah, basic supply and demand, we were too overbought, and we need that corrective pullback. I'm very happy that I learned this price action, because I'm telling you, team, if I didn't have this understanding, I would be getting butchered up here. I'd be going long on that candle thinking, oh, yeah, it's a breakout. This is going to advance much higher. No, that was a beautiful, if you really think about it, that was a beautiful bear trap. They really bear trapped. And we have seen them do those bear traps before. You guys remember this bear trap here? That was a bear trap where we set up for the breakout and boom, massive gap down followed by drop. Same thing happened here. Get ready for the breakout, then massive drop, get that retest of the 20 EMA, and even went lower. Can this be a bear trap as well? Oh yeah, 100%. It's already a bear trap because it already did it. It already did the bear trapping. So, oh yeah, it was a bear trap. So, when we're at these levels, like I said, two things really happen. You either go sideways until the moving averages catch up and then you advance, or you will go sideways and then drop, which is really like, it's a bad situation to be in. All right, let's take a look at QQQ as well. For QQQ, as we can see, we are right at this level of resistance where supply is very, very high. So a potential for pullback is also high on QQQ. I think we got a good amount of room to even go all the way down to 515, where bulls will still be in control. I'm not saying this will happen right off the bat, but considering we're at this level of resistance and we're just establishing it, the possibility for a pullback is definitely likely for us to come down and then come back up and break that level of resistance in the future if bulls do want to advance. Let's take a look at some stocks that or actually, let's go over the sector rotations, because Charles did mention. Charles, when I was going through the sector rotations, I'll be honest with you. I saw your question earlier. You said, where should we expect the rotation to go to? I couldn't figure out where rotation was going to head to, because if you look at it, it just looks like the market is more likely to try and de-risk, unless we get some like unless like on FOMC day we get some badass candle like that, it'll be a massive green where it'll just set the ground for that expansion. If that's the case, with a rate cut, that can 100% propel the market higher. But so far, looking at the market, it just looks like we're we're in an exhaustive cycle, and we might see some downside here. We can take a look at XLY2. Same thing here. With Tesla selling off, this particular consumer discretionary is also showing weakness there. XLE, this one's also selling off. This particular sector also seeing some sell-off. XLI also seeing some sell-off right at this level of resistance, not as hectic as the other sectors, but it could start to sell off. So it may even be a good opportunity to short some of the industrial stocks like Caterpillar, and maybe let's take a look. Maybe shorting Caterpillar. I mean, we are in the melt up operation, so it is a little bit scary. But what other stocks are in the XLIs? So looking at these stocks, I think we can definitely get one red days on them. GE, Caterpillar, RTX, UNP. A lot of these stocks have been advancing to just crazy realms here, and I think a day of pullback is possible on this particular sector here. Now let's take a look at other sectors here. The material sector also starting to see some resistance here. XLRE, which is the real estate sector. This one is not looking, I mean, the best. We did come down to this level of breakout here at 420, turned it into support, and we are rebounding, but they don't have all the fuel in the world to. There's not really much changes for this particular sector to see heavy upside. The volume is just below average, so nothing interesting there. Now, this sector here, XLF, the financial sector, it's definitely showing strength. But again, it just looks like this may have been a bear trap because we were very overbought from the 20 EMA line. So you can see I had my line drawn for this pullback here because when we're far away from the 20 EMA line, we just have to pull back. We have to pull back, and you can see throughout history, that's what happens. You get too far away from the 20 EMA, wait for the contraction back down, then go long on it again. So yeah, we just patiently wait until we come down to these levels, and we will assess from there based on the reaction that we get. Now let's go to XLV. XLV has been getting plenty of strength, and I think if rotation does flow out of tech tomorrow, this could be one that can get some extensive rotation to try and break out from this downtrend here towards 146. If there's going to be any sector rotation, I think it will come to XLV to try and get to the melt up operation at 70% RSI. Let's see what happens. Let's see if I'll be right on this. Oh yeah, consumer staples. This is getting interesting rotation. We talked about this on Saturday's class. This is coming right down to this rally-based rally here inside of this demand zone. And so far, bulls are getting the reaction and could see some upside towards 83 here. So this will be one of the sectors that I'm watching for. Cost, Walmart, PG, KO, PEP, PM, CL, MO, MDLZ, TGT, KMB. I think these stocks could be one to watch for in regards to rotation inflow. XLU utilities, the utility sector is also doing good. Matter of fact, one of the stocks that I am picking up for the utilities is NEE, Nextera Energy. I called this one out in the weekly watch list and looking forward to trading this. It's a post-earnings momentum trade strategy. Bulls placed a massive demand reaction right at a support level, breaking the downtrend. This downtrend here is backed by volume, twice the usual, above the average, as we can see. Big volume there with massive demand, showing that momentum is there. We're putting an end to that downtrend right there. And the RSI is looking ferocious along with the TTM squeeze, signifying that we're going to squeeze. So this is good for the consumers, for the utility sector. And this is backed by strong earnings. The reason why I call this particular strategy here a post-momentum bullish earnings trade is because you are breaking out of you're reporting earnings and you having a very strong reaction to earnings. We've done these type of trades before and they've done really well. Now the only thing that has hurt me before in this particular strategy is that I had given it less time, and that even though it did still work out in our favor, it just really limited the upside and the amount of stress that we got from the position. So because of this, we're taking a longer term approach on this contract, buying to open NEE January 16, 2026, 85 call at 3.50 for a swing trade. This gives us plenty of time, and I think it's a really good contract. do keep in mind, team, despite us having a strike like 85 call, it doesn't mean that we're going to hold this particular contract until the strike is met. We are trading. Our strategy with these long-term swings is with swing trades in general for our mentorship students. Our philosophy is, our strategy is, give yourself time, because that's the number one thing that's really going to save you. And let me give you a good example of that, team. Let me tell you, if I had you see, I made a mistake on Friday and I traded zero DTEs again, okay? uh, and I lost, and I swear to you, I'm not lying to you here, I did make some great profits, don't get me wrong, but my spy put for the zero DTE lost me $490. Now, if I had any other trade, remember when I say, hey guys, I have this trade and I just made this much. I usually say it in the mornings. That's because I'm holding these swing trades. And if I was, let's say, swing trading my spy position because they had gone against me for a little bit, where they didn't come down in that day and they came down a day later. Oh my God, team, my puts right now, the next day would have probably been up like 500% or something. So it's really, really it's crucial that you always give yourself time, even when you believe the move is going to happen soon, okay? Because there are times where actually I'm very happy. You see, for myself, I may make these stupid mistakes, but for the team, rest assured, like I always take the safe approach. And you guys can see I tried to alert that spy multiple times at January 31st, waiting for that drop in the swing trades. And I was selling it on the same day, just panicking, getting nervous for the team because I don't want our team to hold. But yeah, if anybody held, and yeah, they're going to print according to that plan that we had. But I'm just glad Rain Bond was in it and really saved me, because I messed up there. I closed my positions and the move ended up happening. Uh, but yeah, team, that's my analysis. Honestly, for those two stocks, I don't really have anything else to say. I just wanted to show you some stocks. I wanted to show you the sector rotations, to show you why I think it's so important for us to just stay on the sidelines and not do anything. I mean, sometimes, team, like not sometimes, actually, in the right times, which is the times where you need to be aware. In those times, cash is everything. Cash is much better than being in a position just because you're bored and the market is not doing anything. Like when we have these, and the reason why I repeat this is because this happens every single time. You can see these cycles. I'm highlighted. Look at those consolidatory periods right there. Another one. And I'm showing you the daily chart here. So each candle here is 1 day. So each of these candles that you see represents one whole day of opening and closing. And you can see these consolidations that just leads to nowhere and just burns a lot of traders. So that's why I say, hey, team, instead of us, why can't I draw that? There we go. So there we go. So team, that's why when I say, hey, we are consolidating, we're going sideways, and I think our team should stay out of calls, short-term calls. That's what I'm trying to avoid for the team, because what you tend to see is like, you'll see, like, even if you have, let's say, next week or 2 weeks out expirations, if you buy around here, that's 2 weeks and 3 weeks right there. So even when they do come up, you'll end up having your contracts expiring, or you're already paying over 70% of your premiums of your cost to one of the Greeks there, which is one of the major Greeks, like FIDA, which is the interest rate one. So there's really no winning if it's an uphill battle. Let me rephrase it to saying it's an uphill battle with short-term expirations. However, if you give yourself time, it can go against you for a bit, and then as soon as they come back up, because you're not losing any value, or you're losing very little value on time, you're paying very little interest rate, it's going to work very well in your favor. You're going to be more inclined to hold this investment longer, and you can see it just works out so much better. You don't have to predict the future. All you have to do is just follow the price action, go with the price action and let the future itself surprise you. Let every day just react to every day one step at a time, and you'll have a really good understanding of price action. Take into consideration what I'm saying here. With us being in these digestive cycles where you can just stay out and not trade short-term expirations, knowing that it's going to be bad. It's just not worth it. If you wait it out, it can make all of the differences when we buy on the reaction instead. When we know that we already got the liquidity to the downside, and then we're coming back up with the strong reaction. Oh, team, believe me, you're gonna know. You're gonna know this is money on right here. This is where we start to print. So it's a whole different dynamic once you understand when to stay out of the markets and when to participate. And really, that's what I wanted to achieve with today's session. I wanted to make sure that our team do understand this particular phase here, and kind of get an idea why I was so standoffish this week and kept saying, team, stay away from short-term call options. Stay away from short-term call options. If you're in the chat room, you spend a lot of time in the chat room, or you see my comments on the Facebook community, I've been leaving that in the group, especially for Tesla as well. Been saying to stay away from short-term call options on Tesla, and you can see it's just been a disaster. Um, it's down about $1, so it's trading right here. That's still a great opportunity. That's even cheaper for us to try and buy. So Microsoft is down $10. Team, make sure you do buy that swing trade tomorrow. Microsoft is down $10. Microsoft trading at 434. Let's take a look. 434 is right here. Oh, wow. Okay, so 434 is right there. Microsoft will be a good one to buy the dip on tomorrow. Okay, team, keep an eye out on this. Actually, Microsoft could be a good one. I think bulls will try and rescue it up to 439 maybe, or even 437, 438 area. So heading into tomorrow's trading session, stocks like Microsoft or NVDA, they may be good for a dip buy. Like, you can dip buy them as a day trade quickly and then sell them. You can buy maybe give yourself a little bit of time. Give yourself time so that you're not going to if the trade does go down more, it's not going to hurt you really bad. AMD, I bet you it's going down. I bet everything it's going to, yeah, of course. It's down $3. So it's trading at 119 right here, 119.50, trading right there. Amazon, let's take a look at Amazon. Yeah, Amazon's doing really good. Wow, it's been doing really good. Let's see. So this one's down to 229 right here. It's down right over here. Right here. It's down right here, retesting that breakout there. Could still have buyers show up. Could still have buyers show up on Microsoft, on Amazon as well. So team, if you do buy these stocks, buy them and just sell them right away. Make your profit for the day, or sell it the next day and just walk away. Do not think that we're going to go all the way back up and so forth. I'm not saying we can go all the way back up. I just don't want you guys to be trading because some will end up getting a good entry and they will get the trade, like what we're saying, like buying the dip on Microsoft and NVIDIA, or let's say Amazon, and day trading it for really nice profit, or swing trading it by buying it on Monday, let's say during the mid session when the selling exhausts, or at the opening session if we see buyers, and closing it the next day in the morning. But some will be like, you know what? I'm going to keep it the next day in the morning because I want to see what it can do from here. It looks bullish. And that's where the problem comes, because something that you were supposed to day trade or swing trade overnight right away, you ended up holding longer, and now you're holding into the FOMC rate decision, you're holding into earnings, expecting more and more, breaching your rules. So just make sure if you do trade it for that. And if you do decide that that you're going to buy for the long term, wait for the right reaction before you do so. Nano nuclear energy. Yeah, this one's definitely very overbought. Stay away from buying this one. I know you had a contract that went 1,000% in my goodness, in gains. That's very impressive. And Mohammed, I just want to say, the fact that you cut that contract with long term and not a short term, man, I just like it's I'm so happy. I'm so happy. Even if it was a watch list, it's the way you're learning, and it's actually showing you just how great it is. Like, imagine catching that stock, making those amazing profits off of something that that you pretty much learned. I think it's great. So continue to do that, continue to watch. um, don't be emotional if they do move a lot and you do miss out on them, because the experience itself is much more valuable than the short-term profits. XOM, you said. I would honestly, okay, I wouldn't, um, huh. It's very short term, Rob. Very, very short term expiration. I would 100% not take that trade. It would be risky. That's what I'm saying. The reason why I say that is because it's going against the trend in a downtrending market. And our rule is we do not buy short-term expirations when we are trading against the trend. When we're trading against the trend, the only way that we will do so is if we buy super duper long terms. Because when you buy in a downtrending market, what happens is you're basically like, I'll show you. You're seeing these rebounds, you're seeing one rebound, and then you're seeing more drops. And if you have any short-term expirations and price action starts to consolidate like this, you're losing a lot of money. Like, for example, if a trader bought that short-term call option there from November 7th all the way to November 30th, price action did literally nothing. And then after that, it went down even more. So it's always more important to give it more time, because if you gave it more time, let's say from November to January, it did nothing. Look at what happens after like February, March, and April. And like, you can see, oh my goodness, if you bought down here, you would still greatly be profitable because of your time, because you gave it time. Always value time as an options trader. It's okay to sacrifice the strike a little bit for the value of time. On AES tomorrow, okay, team? We're going to average down a contract maybe by Tuesday or Wednesday, but I think if we average down, this is going to be a good move on AES, considering that we have a month on this expiration. So it's one that I am watching, and I'm really glad that you did remind us here, because I forgot about it. I am going to average down on this contract, and I just want to give you guys a heads up on it ahead of time heading into this week.
We do a lot of like events up there. And we have to do events in bowling and boxing.
But team,
I've never heard of boxing.
I just wanted to say, there's really not much. There's really not much for me to share tonight. However, heading into this week, I'm going to be in the live trading room. Royal, which is our fourth admin, is also going to be in the live trading room. And we're going to live stream the FOMC event as well, unlike any other times where I was not present. So this entire week, you can expect me to be present and really trading with the team there, trading with the team, and navigating the markets together. But hopefully you guys understand what's going on and why we feel the way that we feel with the sector rotations, and why there's not a lot of stocks for us to buy. And again, that's really perfectly fine, because you have to understand, team, when you make money from a big move like that, let's say you bought the dip down here, you bought some really nice swings, and you make profits and you close your positions. Like a great example, Mark Diwang, you guys know he does this, and he does such an amazing job. He closes the NVDA trades, he closes his SPY trades around there based off of the admin's narratives, and then waits to get back in during the dip, during the higher lows, or when he gets the right reaction that bulls are stepping in. So when you're doing that, and you're like, it's just, you're gonna do so well. You're going to build a discipline, which is really a true virtue. Building discipline is true virtue, in my opinion, because it takes it takes some self-control to be able to have discipline and wait things out and build a system and try to be patient for things. And you just have to really force yourself for it to experience a few times, once or twice, before you start to fully believe in it. And I really encourage you guys to do it. Give it a shot. um, Try to push your limits on the discipline and see if better things will happen from that. And you may be really in a very, very, very good shock for some great, great things to happen. That's all for me for today's session, team. I hope you all have a wonderful rest of the night. I did post them in the weekly watch list. And if there's anything else, I will also include it. But what I will start doing on Sunday meetings, I didn't do it the Sunday meeting, but for future Sunday meetings, I'm going to include contract suggestions with our analysis to have the team basically even make the decisions on their own when the right market conditions provide. But yeah, team, that's all. I hope you have a wonderful rest of the night. Hello, Jorge, and bye, because we're about to end the session here. We'll see you. I'm so happy you banked, by the way, Jorge. We are so happy for you. Very, very nice. Very shocking downside, but yeah, we're very happy for you. And we're also very happy for Rain Bond and everyone else that's holding the put trades with Rain Bond, who are going to wake up very happy, hopefully. Take care, team. Have a good night.